Yeah, so what kind of land development did we do? Yeah, and that's a great question because there's all sorts of different ways. I talked a little bit about the value add that you could do. Obviously, from our standpoint, from an investor's standpoint, we were looking at deals that were in the path of growth that were going to be the quickest to be absorbed and to be able to move into some sort of a disposition on the backside. And we wanted to do that the quickest with the least amount of cost associated with it and not get tied up with a whole lot of things, especially as we were new and active in moving this thing forward. So, our primary focus of the business was just that, buying speculative land in the path of growth, being able to do at least the first phase of soft cost value add, which was, all right, you throw some money at some planning and design, you take it through and you start to look at zoning and you start to look at some preliminary platting of the property. Once that part of it was done, it was now marketable at a price that would be more favorable than what we originally bought it for. And so that was really our first priority in terms of maximizing how we could structure these deals so that we could get out with the most and the quickest. So when did the business take off? The business actually took off after that first deal. The reason is you make your money in real estate on the buy. That's when you make the money. Your basis has to be right, especially in these land deals, because then you have all the soft cost value add and these entitlements that you can do that are going to bring that additional value. So when we made that first deal, and it was just happened to be in the sweet spot at the right place at the right time, and we hustled it through to get the first part of the entitlements done. We made some zoning changes and we got some things done. We were well on our way to start working on a preliminary plat, and we had a home builder that came in and offered us a boatload of money because it just happened to be the right deal at the time. So to give you an idea, we bought this piece of property. It was like, we were into it for about $2.5 million. And we had a deal for $24 million to sell. That's 10 times on our money. And the whole period of time would have been about 18 months from start to finish when the thing closed. So with that being said, we had some other investors that heard about that from investors that were in on other deals. And we were, in the land syndication business. So these are all single asset entities that we had created, all Reg D. And we were using all equity to make these investments so that there wouldn't be any risk to the investors or loss if something went south. So after that acquisition of that first deal and we had that stuff done, all of a sudden money started to pour in. We had interest coming in all over the place. And then it was like, okay, we started having deals. We were on the inside track now of having deals brought to us because we started to become a player as we started to add more and more properties to our portfolio. So that's really how it got started. Now, what did lifestyle look like at that point in time for us? I mean, let's think about it. We had the deal within the first 14 months. The deal closes. We were into it for $2.5 million. It sold for $24 million. I mean, we had a ton of money that was coming in. Some of that was distributed to the investors. As soon as that money got distributed to the investors, they were showing up to the office wanting to throw down just more and more money, right? Because they were like, when's the next deal? I want in on the next deal. So it was a crazy time for us. I mean, we had moved out of the big house that we had built. Obviously, we had lost that during the previous bankruptcy. We kind of had an interim house that we had and fixed up for a while, but we had an opportunity to buy a house when I was working with Conley. And it was in the right school district, in the right area. And this was a house that needed some work. It was a little bit older, but we were able to just go in there and gut it, remodel it. I mean, we completely redid this thing from start to finish. The outside of it didn't even look like the same house anymore. And we paid cash for all those improvements. I mean, it was, the money was flowing. Think about how much money there is coming through the pipe. And you would just take what you needed on these deals as they would start to roll through. Then we would double down and maybe 1031 and roll money into the next deal and double down. And it just kept snowballing and growing. I mean, there was a point in time there where we're going and flying in private jets, having meetings with prospects and other areas. A lot of our money came out of the Pebble Creek or Pebble Beach area, I should say, not Pebble Creek, but up in that Monterey Peninsula area. And we had a partner that was on the ground with us, based out of there, that was one of the investors. So it was an incredible time. A lot of incredible things were taking place, and I mean, it's like wind grabbed a kite and just took it, and it took off. And we were very, very careful with how we invested our money. We stayed away from leverage. We were all about protecting the investors in our deals, and so that was our premise in how we would move forward with transactions. Things started to change early on. When you're in the land development in the land development business, typically home builders would want to have about 2 years worth of inventory of lots available to them at all times to be building. So somewhere in the process, right, they were acquisitioning these lots that would give them that 2-year supply based on what they thought their demand was going to be. We started to see early signs, as early as probably 2005, that there was starting to be a little bit of a shakeup, at least from the home builder front. Things were starting to slow up a little bit. By 2005, we had, but it was kind of the height of the market at the same time. I remember we had a deal where we had paid, I think, $3.5 million, all things said and done, entitlements, etc. One of the big builders, Continental Homes, came in. They offered us $18 million cash on a 90-day close. That's a pretty big deal, pretty quick, a lot of times on our money. We went to the investors and we said that, well, during that time, as we're trying to get that deal prepared for this 90-day close, we had another builder come in, through the same broker, mind you, that offered us, $32 million on a 2-part close. Basically, we're going to put $5 million of hard, non-refundable money down. It's a good thing. But we're going to wait on the close until we have final platted lots. They don't have to be horizontally developed. We just want final plat lots. Well, you go to the investors and you tell them that, and greed says what? Wait for the second close. Well, by the time that we went into escrow, by the time that it was going through the final platting process, meanwhile, the market had already disintegrated and was down. That's how quick things happened on the downturn. So, there's a lot of, and that was basically into probably 2006, maybe late 2006, by the time that deal finally fell through. But all those types of things were kind of happening along the way, and it was just a crazy time. Where we really saw it as a developer was brokers were trying to convince us as investors, hey, come buy this piece of property. You're 40 miles away from the job center. Gas is over $4 a gallon. And dual income families, dual income, no kids, dinks is what we called them, they're going to be coming in and having to pay for entry-level housing. That's affordable housing. We really focused on affordable housing. Why? Because that was the fastest absorption. When you looked at the amount of permits, which was way up there, I can't remember, it was like 60, 70,000 permits a year, maybe at the top of the market. That's a lot of absorption of new homes taking place and being built. When you're looking at a 40-mile trip to the job center and they're telling us that entry-level housing is going to be $295,000 for a single-family residence 40 miles away from a job center for kids that had just gotten married and just out of school, I'm like, it wasn't that long ago that I was in that same position. We lived in Chandler, right outside of Tempe, and we paid $105,000 for our house, and we thought we were bootstrapped at that point in time, with a house payment of $800 or $900. It just didn't start to add up, but they were doing that to validate the basis in which they were trying to sell us the land for. And I'm just like, there's just no way. These prices have run up. They've gone too far. This is out of control. There's got to be a correction that's going to take place. So we really started backing off on acquisitions of property pretty early on. It was, I think, probably somewhere in the late 2005 range. I don't think we made another acquisition after that. What's interesting about that time frame is, as we had a big quick run, it was very fast. Things were moving at lightning speed. We had an opportunity. We were in kind of talks with Lehman Brothers. Lehman Brothers had looked at us, what we had built very quickly. We had basically placed about $100 million in equity over a very short period of time. And they saw the value. And if you took a market value, they did an assessment on the property based on, what those projections are and the what ifs are. That if everything was there, they had our portfolio based at about $380 million. The proposal was, hey, we come in, we'll partner with you, but we want you to debt half of your property. Again, we had all equity investments in these deals. And, as tempting as that is, back in 2004, when the market's really ripen at its height, at least for the land development side, we're like going, I don't know, man, that's crazy. And what if something happens? We told our investors that we wouldn't debt the property unless we were going horizontal with a land development and a joint development agreement with a builder. So as tempting as that was, we just never did that.